Hi, how's it going everyone? My name is Henk, and in this video I'll be taking a look at another company in the New Zealand Top 50 Index and talking about one of the biggest growing sectors in today's market. No, I'm not talking about Bitcoin, electric vehicles, or self-driving cars. I'm talking about retirement homes, or retirement villages, or rest homes, or elderly care centers. On the New Zealand Top 50 Index, there's quite a few retirement home companies, which include Ryman Healthcare, Avida Group, Oceania Healthcare, and Somerset Group. Now, before I actually started doing research on this, I didn't actually realize how many retirement home companies there were in the New Zealand Top 50 Index. So that came as a bit of a surprise for me. Now, when you think about it, it's kind of funny that there are around 4 or 5 retirement home companies in the top 50 index, which means that around 10% of the New Zealand top 50 is comprised of retirement home companies. Now, I decided I'm going to take a look at one of the biggest companies in that particular sector, which is Ryman Healthcare. They have a market cap of more than $6 billion. Ryman Healthcare owns and operates retirement villages and hospitals for the elderly in New Zealand and Australia. They offer a wide range of retirement living and care options such as independent townhouse and apartments, as well as care centers. They provide rest homes, hospitals with patient care and other daycare services for the elderly. Their company village also offers lounges, indoor swimming pool, spa, gym, library, internet cafe, movie theater, and all sorts of other facilities. So basically they have lots of good stuff to keep people staying there entertained. They were founded in 1984 by Kevin Hickman and John Ryder. By combining their last names, they came up with Ryman as the name of the company, which I thought was quite smart and highly appropriate. They have a total of 34 retirement villages, with the majority of them located in Auckland and Christchurch. I wanted to take a look at the general trend of the age groups in the New Zealand population and whether or not their retirement villages would see more use over the coming years, which leads to more possible profit. Now, in order to do that, I went and looked up the census data for the various different age groups in New Zealand. But overall, the New Zealand population is definitely getting older. Now, back in 2006, there were around 500,000 people aged 65 years and older in New Zealand for just around 12.3% of the population. And in 2013, there were around 600,000 people aged 65 and over, which is around 14.3% of the population. And in 2018, there were over 700,000 people aged 65 years and older, which accounts for 15.2% of the population in New Zealand. So this is a chart showing the percentage of New Zealand population aged 65 years and over the past 40 years. Not only is the elderly population expected to continuously increase over the next 20 to 30 years, the population of people aged 65 plus is expected to double to almost 1.37 billion by around 2043. Which accounts for 23.1% of the total population. This aging population would mean that there's definitely going to be a significant demand for the retirement villages within the next 20 to 30 years. If we take a look at the financials for Ryman Healthcare, their earnings from 2019 was 326 million. Compared to 2020, which is 265 million. And that is a 19% decrease to the company's bottom line, which is quite a significant drop. So while their revenue keeps on increasing over the past 5 years, their actual earnings after tax has not been increasing and instead has been decreasing. Their earnings per share is also down by 26% over the past 3 years, so the company has not been growing their earnings over this period of time. They have a return on equity of 11.8% compared to their industry average of 8.9%, which is quite a bit above the industry average. However, one of their main problems is that they have a current ratio of less than 1, which means that they carry more current debt than their current assets. And this is particularly troublesome during these difficult times where many companies have difficulties in repaying their debt. They have a 5-year average dividend yield of 1.79%, which does not make them a particularly attractive dividend yield stock. Although they do have a track record of paying out dividends for more than 10 years, which means that management considers paying out dividend as something more important than growing the earnings of the company. Ryman Healthcare has a dividend payout ratio of 44%, which means that they have more than 50% of earnings that they are keeping. So they're keeping a lot of money that they could use to further grow their company. But for some reason, this does not actually translate to a significant increase in earnings compared to some of the other companies in the same sector. So they're kind of in this very weird, peculiar situation where they should be growing more, but really aren't. Now, one of the main bright side is that analysts are expecting a 14% growth of the company over the next 5 years, which is definitely a positive. They are also expecting a 21% growth in earnings and a 10% growth in revenue within the next few years, according to analysts. Let's now take a look at the company share chart for Ryman Healthcare. So the company shares hit an all-time high of around $17 back in February of 2020, before all of the lockdown thing happened. But they have been hit very hard during the lockdown to reach a low of around $7. Since then, it has recovered to bounce back to around the $14 mark. Over the past 5 years, the company stock has been performing extremely well, with more than 100% returns over the past 5 years. Overall, Ryman Healthcare is one of the biggest companies in the retirement healthcare sector. But the fact that they do not have much of an increase in earnings is definitely a cause of concern. Long-term investors should still feel very positive that analysts are predicting a 14% growth rate for the company over the next 5 years. And with an aging population in New Zealand, more and more people will likely be using their services. However, due to the fact that they are not a growth stock and they don't actually pay particularly high dividends, I will be quite careful putting in a lot of money into this company. Personally, I would like to see what the financials are like after their earnings date, which would be on the 19th of November, before investing too much into the company itself. But this is a company that I would definitely keep an eye out on my watch list. If you're new to the channel, you can use the link in the description below to sign up to Sharesies, which is one of the easiest to use platforms for trading company shares within New Zealand. Now, if you have reached the end of the video, you're pretty awesome, and let me know in the comments below the age of the oldest person that you know, and I will see you in the next video, and I'm off to a Halloween party, and I will see you guys next time.